It's an overall a positive week around the world. Let's start in Asia, where the markets close early, ending the week higher, with investors upbeat on positive data and trade optimism. Investors are also positive that Britain may avoid crashing out of the European Union. After a turbulent month of August, dealers are confident after news that China and the United States will resume high-level trade talks next month in Washington. In Tokyo, the Nikkei adding 0.5%, the Hang Seng up 0.7%, and the Shanghai Composite Index in China up 0.5% as well. So US stocks closing overnight, they surged yesterday on expectations of a de-escalation in terms of the trade tensions after Washington and Beijing agreed to hold those talks, while strong US economic data eased fears of a domestic slowdown. The Dow Jones Industrial up nearly 1.5%, the S&P also up more than 1.5%, and the Nasdaq, the tech-heavy Nasdaq, up 1.75%. The JSE a little stronger today as well, and the rand hitting a new month high, 175 or so against the dollar at the moment. Let's take a quick look at your main financial indicators. All right, Warwick Lucas from Galileo Capital joins me now for some analysis. Great to have you with us in studio, as always, Warwick. So the rand, again, there was a bit of a dent yesterday. It seemed to slow down because of the current account deficit. But back up, what's driving the rand?
Well, I think within the last month or so, I mean, we've had some quite decent-looking precious metals data. You know, platinum looking stronger, gold looking firm, and then to back up to that, of course, we had some rather nice GDP data a few days ago, which I think has been quite a good driver, certainly this week. So, yeah, a slightly better looking story for us.
The question is, though, can this current strength last?
Well, always a question. I think across the year we've had a steadily weakening picture. So this is a zig strengthening across a longer zag. I would say that we're probably in a situation where we've had a rebound in GDP, sure, but it really got to prove itself into some kind of a trend, and we're not really there yet. So I'm not looking for too much more on the rand.
And I guess it also depends what happens globally, because so much of the rand trade is about people feeling they can take on riskier assets again. So
Absolutely.
It'll rely on a good Brexit sort of turnout, something controlled, and better trade relations
Absolutely.
between the US and China.
I mean, the South African consumer is really very, very cautious. I mean, you can see it, for example, in the debt figures and personal deposit rates. I mean, bank deposits have been steadily climbing this year, and that basically shows the SA consumer is very, very cautious still.
Yesterday there was, like I said, that slowdown in sort of the strengthening of the rand because of the current account deficit. How serious is it to you, and should we be concerned about a current account deficit?
At this stage, not too much. I think part of it relates to noise in the economy. So, for example, we had a big GDP rebound, and I think part of that, Q1 versus Q2, very noisy data. Q1 was obviously severely hampered by the problems at Eskom, and in getting a rebound, well, I mean, a lot of that rebound is going to show up in consumption data. I mean, SA economy is very consumption driven, and also in relation to things like current account deficits, there are going to be lag effects in relation to the currency as well. So as we
So
move
you're talking about imports, are you? So South Africa importing
imports and
more
exports.
than we export, but that's not too alarming performing right now?
Not really, no. I think that as the rand has weakened across the year, I mean, so that's going to catch up and start breaking in there. So I'm not too concerned at this stage.
All right, so let's look at the week as a whole, or even the last 2 weeks, because it's been results heavy. We've seen results from various retailers not doing so well. Then we had Discovery, FNB, so the banks coming through, Sanlam. If you look at it in terms of big picture, are these companies really being affected by the slow growth in our economy right now?
I think absolutely, and it varies across the board as to who's the best prepared. I mean, we can contrast, for example, banks versus retailers. Well, I mean, the retailers have basically walked straight into the punch, whereas the bankers have actually position themselves well ahead of it. So, for example, the retailers have for many years overinvested in space. They've let their costs run ahead of revenue, and they're now in a situation where, combined with this high level of saving, they're getting hurt quite badly. The banks, by contrast, have been steadily reining in their costs, using technology, working smarter and more productively. So, although they have also struggled with the situation that their loan books haven't grown, once again, people saving more, they haven't been hurt as much because their costs and their bad debts are basically in line.
All right.
So
we have to leave it there only because something is happening outside the World Economic Forum venue right now. But thank you. I think we've looked at the week as a whole. Warwick Lucas from Galileo Capital. All right. Now we understand that police have fired rubber bullets